Hello, welcome. Okay, let's get right into it. Today, I'm going to talk about the Great Divergence. Okay, let me share my slides. I opened up earlier on. Let me find where it is. Okay, I hope you can see me. You're not going to replay or redo this recording. It's been a while since I done the previous market update, and I would like to reshare some of my thoughts, ideas, and opinions about what's happening in the market. And trust me when I say that there's really a lot of resistance doing all this video sharing because beforehand we need to really get all the slides prepared, data compiled, and organize our thoughts before we put on the camera and roll. So if you do find value in this kind of videos, do like and subscribe to this channel and probably leave a comment about what do you think about the video. Thank you in advance. Okay, so general disclaimer, right? Please read through to make sure that whatever I say, please do your due diligence, yada yada. Now, before I start, right, I always like to share with people is that in Singapore context, right, when we buy a property, right, you are not just buying a home. When I say home, it means that, for example, like uh, the mindset of like our parents' generation, we have this, they have this mindset, not we have, they have this mindset of a forever home. Meaning to say that they buy into one property and they stay there forever. They don't have or very little intention to change. But over the years, as you can see with so many educational content in the social media, people talking about property in general as a hot topic for many Singaporeans over here. We do understand that Singapore property context, right? The property is not just your home. So let me elaborate. The home means it gives you security, memories, love, a place for you to belong, okay? A sense of belonging. But if you buy into a wrong property, also called into a loss-making property, you will have this feeling that you get stuck or you do not progress as well as you hope to be. In contrast, a strong property that helps you to beat inflation, build equity over time, and provides you with strong rental income. This is the kind of property that we aspire to hold on to. Not forgetting, as we progress, some people who are able to find financial means to grow their property into a landed property, this freehold landed property will be able to use it as a source of strong opportunity to create the down payment for your next generation. So over the past 15 years, right, I have met so many different type of buyers, homeowners. They share with me their hopes, dreams, aspirations. In general speaking, I'm not saying this as a blanket statement, but in general speaking, most people do want to achieve their best potential so that they can provide a better future for their loved ones. So the ultimate dream of most Singaporeans families, they will want to upgrade or asset progress into a large or stable property portfolio so that they have one, a stronger retirement plan, or two, they have something to leave behind for their next generation or their surviving loved ones. So I share this with many people. A home not just provides you a good lifestyle today, it also secure your future tomorrow. A strong retirement plan, legacy planning for your next generation. This is what we aim to achieve from that property. But the way with ChatGPT and everything, these images are quite nice. I try my best to do a few, but quite time consuming to create all these images also. Now, just some market updates, right? If you have been following the news very closely, Singapore general economy is doing relatively well. In fact, the MTI recently upgraded the GDP growth forecast to 2.2 to 4%. What does this mean is that last year, right, they actually overachieved their forecast. Now, this year, the February 2026, right, MTI announced that the economy expanded by 5% in 2025. So they also announced that the growth forecast for 2026 has been upgraded from 1 to 3% to 2 to 4%. While the percentage may not seem any significance to you, right, it basically means that generally Singapore economy is doing very well. Okay. Now, of course, people who do not know or who are not very savvy with the economics, right? We have to understand that the Singapore monetary policy, right, is something that we have to understand as well, because the exchange rate, right? I try to explain this in a more layman term, because we are a very resources dependent country. That means we do not grow our own vegetable, animals, meats, and all these things. So we have to import a lot of our food resources from overseas country. So in order to make sure that our price remains stable, Singapore government usually like to use currency, right, to make sure that our domestic inflation is keep in check. In short, for example, today, if I use Malaysia ringgit, $1 to $3. If I have to use $1 to buy $3 worth of goods, right? But if let's say Malaysia side they decided to increase price, the solution that the Singapore government can do is to strengthen the currency. So you can see that sometimes you can see that our strong currency actually has been steadily appreciated in comparison with foreign currencies. So this is something that is not very talked about. To be very honest, I am not I'm not economical, sorry, I'm not economist trained in a sense, but this thing will have a very strong impact to the Singapore property market. So as mentioned, right, the Singapore monetary policy, right, the government actually allow, right, this currency, right, to fluctuate a certain band, right? Then our Singapore dollar, right, is managed against a basket of currencies of our major trade partners. So all these things, right, it's to make sure that our domestic inflation, right, it doesn't go too haywire. What it also means is that, right, for global investors, when they look at Singapore property or Singapore market in general, right, we have a lot of checkbox that kind of attract them to park their wealth over here. Today, investors, right, if you look at the whole of the world right now, you will agree with me that it's quite uncertain. There's a lot of things like geopolitical instability, AI disruptions, yada yada. So a lot of wealthy investors, right, if they are seeking for city, I repeat many times in my videos, Singapore is both a country and a city. So if you're looking for a city to park their wealth in, right, generally in let's say Asia, the stable countries that they can think of, probably we're talking about Hong Kong, probably Singapore, Shanghai, where else? Some of these top cities in Singapore, in Asia that they can park their money in, right? If you look at Singapore, we do have a lot of things such as political stability, rule of law, low corruption, a very safe banking system. So naturally, money will flow into our country. And when we say about money, some part of it will naturally also flow into hard asset, will naturally flow into physical asset like property. So like it or not, we are already attracting wealth from all over the world, right? Now, if you look at the most recent article that is published just a few days back, July 13, you can see that the luxury home market, right, has outperformed despite an overall market volume slowdown. So property price 5 million and above, right, they have actually recorded 353 transactions in the first half of 2026. And this is a 24.7 increase in comparison from last year and a 54.8 increase in comparison to 2024. And this is the highest first half luxury home sales in 4 years, which means to say, right, a lot of these affluent individuals has already start to pay notice or start to enter into the Singapore property market first half of this year as they find value putting money into this segment, right? So this tells you where they are focusing their attention to. Now, in general speaking, I would also like to share with people about the population growth in Singapore. From 2029 until 2024, as you can see here, the average citizenship granted from 2015 to 2029, right? It's about 20,500. PR is about 31,700. And 2020 to 2024, right? Average 21,300 for citizenships, and for PR, 33,000. You may have noticed, right? The COVID year, it has dropped because a lot of people are being locked down, right? There's a lot of restrictions, so they are not able to come in. But even after the tightening of the citizenships, right? If you know what happened in the past, there's a 2011 government lost one of the GRC because of the so-called a bit of out of control immigrations that's coming into Singapore. But generally, you can see that from 2010 until 2024, the numbers are quite steady. And in fact, I will say that this is where the government is trying to go towards, because there's two things that's happening in Singapore population in general. We are facing aging population and we are facing low birth rate. And in order to keep the economy going, Singapore government, no choice. They have to continue to attract highly skilled labor, highly affluent individuals, and businesses to come into Singapore. So this is the population growth that has been checked for the last 20 years. Okay. Now, this is what I want to share with you, right? See the total population. In fact, in the 2021, we tracked a drop because a lot of people, they either give up their citizenship or PR, or they decided not to stay put in Singapore anymore when the COVID happened. But immediately the next year onwards, right, you can see that the numbers rebounded very strongly, which means to say that the government, right, is actually tracking and making sure that the numbers are healthy. And 2025, which is last year, we have 6.11 million in terms of the total population over in Singapore. So despite the fact that we dropped in 2021, minus 4.1%, it's a strong rebound afterwards a few years later. Now, what does all this has to do with the property market, right? Even though the Singapore government keeps saying that 6.9 million is not a real target, they just keep saying that it is a infrastructurally planned target and all that. So, but I always share with people, it is a soft target in the sense, to me, this is just my personal opinion. And in the separate news, right, you can see that his good friend, this one, Lawrence Wong, on the left, Lawrence Wong says that we are trying to make sure that our population remains stable. He said our TFR is so low, how to get 10 million? So this is actually just to answer the crowd. Some people saying that Singapore government is trying to push for 10 million population. Then in February 2027, right, Mr. Gan Kim Yong mentioned that we will take in 25 to 30,000 new citizens annually over the next 5 years to boost population, because they have already see a very big thing that's happening. Our TFR is dropping like crazy, and aging population means that a lot of people is going to be going to heaven. So over the next 10 years, in order to make sure that it's a healthy economy to support the social fabric, to support the societal stability, we have no choice but to take in new citizens. Take note of the numbers, 25,000 to 30,000, compared to the previous slides that I showed you just now earlier on, right? 2015 to 2019, it's 20,000. Sorry, 20,500. 2020 to 2024 is 21,300. This is talking about citizenships. But now, we are going to increase that number even higher. To me, that's something to watch out for. Right? So you can see, population from 2005 to 2025 is 4.27 million to 6.11 million. Percentage increase of 43.1% over 20 years. But if you look at this chart, sorry, the figures are too small, but let me zoom in. The same period of time, OCR, RCR, CCR, I'm tracking the non-landed resale property price growth. It is more than 200%, right? 2.5 times. Meaning to say, right, today, right, if not me lah, my parents lah, our parents' generation, if a parent or someone more elder, right, has bought the property back in 2005 for $1 million for OCR property, without any effort on my part, this property has become 2.69 million. Of course, this is just a general statement. It really depends on which condo you are and all that. But this is what the numbers is tracking for both CCR, OCR, and RCR. Okay. Now, next, we also see this news happen very recently that 1 in every 7 Singapore families has income of at least 30,000 a month. The share almost doubled in 5 years. All these, right, points down to one thing. We are attracting more and more well-paid, high-skilled individuals, and these numbers are likely to raise the overall household income. Of course, all this rise in income is just not confined to top owners. This guy called Terence Ho mentioned, nominal household incomes have grown significantly across the income groups, reflecting national efforts to narrow the income gap. So, as what the PM Lawrence Wong mentioned earlier on, right? Even if the population numbers remain the same, that means let's say it's 6.11 million for the next 10 years, right? The policy of attracting high-skilled talent means that the overall population will become wealthier, right? This is my read on the market. Next, the top 30% of the household income, this is last year, they earn, right, the median, earn 13,000 and above, and the largest group of around 29% earning 20,000 or more. If your household earns 20,000 or more per month from work, you are within the top 30% of the income earners, right? This is just talking about the income earners. This is also another article published by Dollars and Cents, right? Next, I'd like to show this to showcase to you that who are the people that is buying into different types of property in Singapore. So as you can see here, 2025, right? The average change in terms of the monthly household income by type of dwelling. So they break down all the different types of housing in Singapore. So you can see that for the landed properties, right, 2024 is 30,050 to 31,466. Condo, 23,366 to 23,793. So why am I showing you this is because some clients that have consult on the ground, they mentioned to me that, hey, if I buy into such property, I read somewhere that the median average income earners, right, is only drawing 15,000 per month. Who are the people that is actually buying over for me? Now, you have to look at the top percentile, or you have to look at the top 20 to 30% of the income earners, right? Who are these people actually are, and how much are they earning? So this will actually show you a very strong figure. This is just based on average. So within this itself, there's also a range. For example, the condo, right, 23,793. Probably there's also a range from like 15,000 to 50,000, right? Just to give you some idea. These numbers, it's for you to understand and take note, right? So in general, right, the income rise will also support the rising property price, right? The higher the income the household has, it generates stronger demand and higher affordability, which also means that there will be a strong support for housing prices. If prices of property continue to appreciate, it kind of justify that people would want to buy more into assets that can strongly preserve their wealth and demonstrate strong hedge against inflation, right? So as you can see from the chart over here, for the past 10 years, property price index has increased 53%. I don't know whether you can see my cursor pointing over here. While the income index, right, has only risen 37%, which means to say, in general speaking, property prices has risen faster than income growth, right? So these are just some charts to show you how the performance of a median household income has grown from 2015 at 8,800 to 2025, 12,400, right? As I mentioned in my previous slides, I've break down who are the people actually buying into condo, who are the people actually buying into landed market. So in conclusion, right, the income helps you to qualify. The property ownership helps you to benefit. Time is an advantage. The earlier you take action to go into the right property asset class, the easier it is to close your gap. And if, let's say, today you are not a business owner, you are just, let's say, employee, do not neglect the fact that property is a very strong asset for you to tap into very strong asset growth as well, right? Next, some news. If you have noticed the start of my YouTube title, I call this the Great Divergence. Not so good news. If you have noticed, right, the PPI has actually dipped for HDB, which if you have been following my YouTube channel, I've been sharing a lot of news about what's happening on the market and everything. We are likely to see what's happened in 2017, right, to repeat again. There are some telltale signs already happening, right? Let me elaborate further. So as you can see, 2023, we still see some growth, some form of growth. And then 2025 and Q2 of 2026, you can see that actually we are actually seeing that the HDB PPI is tracking negative growth, which means it is a very, very, very slight drop. But probably on the ground, if you are the homeowners, you still don't really feel that impact yet, because for 900,000 to drop another 30,000 to 870,000, you likely would just brush it off as nothing much, right? Further breakdown, if today you're in the market, you are belonging to the older flats, the pros and cons is that people who are looking for bigger space, better location in mature estates, these will still tend to perform well. However, the buyers who are considering this kind of old flats, right, they may also consider the future resale potential. And the remaining lease decay also means that younger buyers will have loan restriction and CPF restrictions, and they may take lesser grants as well if they're buying into older flats. For more elaboration, right, can always feel free to PM me. So on the ground, I have already experienced this, that some young buyers, they are hesitating to buy into the older flats, right? So you can see that the red color chart is actually the new flats. Then the blue color one is the older flats. So within the HDB market itself, right, we are also experiencing what I call a split. So today, if you are a homeowner holding on to a 3-room, 4-room, and you're planning to do some asset progression for yourself, do some upgrading in terms of space, you may seriously want to consider not just upgrading the space, but also take the advantage to renew your lease into a younger flat. Of course, this requires some consult and planning. It's not so straightforward, right? So please feel free to reach out to me if you need help. Now, I've been in the market since 2011, thereabout, right? And 2017 is a critical year that I noticed that the market actually split up. I call it a good divergence. The private property prices continue to run up, right, in 2017 leading to 2020. But the HDB actually went stagnant, right? Today, we are kind of seeing this thing may be happening itself again. Some people ask me, why is this happening and all that. The answer is very obvious. The government is flooding the HDB with a lot of new supply. So a lot of resale market, they are struggling to sell at good price right now. Whereas if you look at the whereas you look at the non-landed private market, you don't see government flooding the market with a lot of cheap condo, right? So it's still based on land bid. And in fact, all the recent land bids are high price. So you can already guess or forecast where the market is going. Now, I break this down in a chart form. The chart is very small, but you can always feel free to pause the video and watch yourself. But the key text is on the right-hand side. Quarter 3 2017 to quarter 4 2019, you can see that the HDB resale actually dropped 1.88%, right, over a period of 3 years, 4 years. Of course, at this point of time, if you're buying a HDB, then you say, just for my own stay, I don't really care. It's fine, no problem. But if let's say today you are in a very good position to choose, you have the luxury of choice, you may want to reconsider your next step forward, because the last few years, the market for both HDB and condo market has performed relatively well. So a lot of people will say that HDB resale also expensive, condo resale also expensive. No difference. But we are already seeing that for the recent quarter, right, HDB resale is stagnant. Stagnant, that means the price didn't move much. Whereas the condo resale continue to steadily inch up. So it may, or it kind of feel like what's happening in 2017 leading up to 2029. So if today you are in the market planning your next move for the next 3 to 6 months, you have a choice to buy a condo resale and a HDB resale. You may want to think carefully in terms of what you want to buy into next, right? Now, coming to the last slides. What I usually want to do for my clients, right, is that we will do a one-to-one consult, right? I will always want to understand your current life stage, your priorities, life goals, and financial positioning before you plan for your next move. And typically, I will draft out a few options for you to consider. And if you are going for a condo resale or new launch, I will want to make sure that you're buying into the right entry price and also discuss about the future exit strategies. And rest assured that I'll provide a lifetime support after purchase, and usually we will do a review of opportunities every 3 to 5 years. My number is below, and if you like this video and if you want a more detailed and more comprehensive understanding of what's going to happen for the next 3 to 6 months, feel free to reach out to me. Once again, if you like this video, please feel free to like and share. Thank you very much.